Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and Tulsa markets. One of the advantages of investing your money in real estate is you get some things that you just don't get with any other kind of investment. So, first of all, if you invest $80,000 in a stock, you get $80,000 worth of that stock. You invest in real estate, you get $250,000 of that property because you're using other people's money and you're getting positive cash flow. But what I really like about real estate and what's really enhanced my net worth over the years is the tax deductions that you get. So what I love about real estate is that you can make money while the IRS says you lose money. Now that doesn't make a lot of sense to people, but let me explain. When you buy a home, you get from the IRS a deduction for the improvements. And they take out the land, which can never depreciate. And then they give you 27.5 years on the house, saying that's the normal life of a house. And that's your depreciation schedule. So you take that, you divide it by 12 months, and you find out how much the IRS is deducting. And so, for instance, on a recent investment that I sold, the positive cash flow was $300 a month. But according to this schedule, the IRS says, well, you're losing $431 a month. So in other words, $131 a month loss. And those losses carry forward. So you keep it 10 years, 120 payments of $131 loss. And then when you resell it, then your basis for taxes goes down. But it gets even better than that. Any repairs you make, any improvements you make, also goes on that 27.5 years. So the deductions get even greater that you're able to have after 10 years if you decide to sell it. Now, if you want to sell it, then there's a thing called a 1031 tax deferred exchange. What that allows you to do is sell your property, buy more property, what's called a like-kind exchange, and not pay any taxes, because there's two kinds of taxes you pay if you just want to sell outright. Number one is recapture tax. That's 25% of the depreciation that you took, which of course gets greater and greater as you keep it longer and longer. And then after that's done and the basis goes down, then they assess a capital gains tax. Now, the cool thing about real estate is you're still making, usually I've got one where you're making over 13% per year on a 7-year basis, even if you sell it outright. But if you keep it and do a 1031 tax deferred exchange, you've just made over 20% annually on your money. Compare that to any kind of investment that you can make. No other investment does this for you. You can buy a tax-free municipal bond at 4.5%, but it's not going to give you anything in double digits. It's going to give you 4.5%. Now, there's another thing that happens that I truly love, and I have investors doing this. I have investors with a lot of homes. Eventually, they're going to be paid off. And of course, they're going to keep them. Some of them have kept them 20 years now. And so what happens is eventually there's an event that happens to all of us, which is you die, okay? So you have a family. And what happens on death is those properties transfers, of course, to your heirs. But here's the good news. All of that depreciation, repayment, all of those capital gains completely disappear. In other words, this is why the 1% have a lot of real estate. And they give their children fantastic net worth with those investments. They don't owe a dime on it. It just completely disappears. This is why real estate should be in anybody's portfolio that has the money to build things up to create long-term wealth. Let us help you. We have some fantastic investments in Oklahoma City, even under $250,000 for a turnkey new home. We'll be happy to help you out. Request a Zoom meeting. We can discuss a plan for you.